The US stock market is not looking too hot right now. So in this video, I'm going to go over what's likely to happen and what you can do to prepare for it. And of course, profit from it as well. I'll also go over some stocks that will make you money in the long term, even if you buy them right now. So year to date, the S&P 500 is up about 3.8%. If we zoom out to the last year, you still can see significant gains of over 30%. And if we zoom out even further to the last 5 years, we can see that the S&P 500 has almost doubled. Year to date, the Dow Jones Industrial Average went from about 30,000 to 31,500, which is up almost 5%. In the last year, it went from 24,000 to 31,500, so over a 30% gain, which is very similar to the S&P 500. And looking at the last 5 years, we can see that it went from around 17,200 all the way to 31,500, which is up 83%. So it's obvious if you look at the overall big picture that it doesn't seem like this is a crash at all. Sure, it is a decently sized correction, but nothing like 2008 or when the pandemic first hit. However, when you look at the NASDAQ composite, that's when you start to see a pretty big sell-off. The NASDAQ is more focused on tech and high growth stocks, which are the stocks that have been hit pretty hard recently. So we can see that the NASDAQ hit an all-time high of over 14,000 in February, and now it's at just under 13,000, which is like a 9.7% drop. However, if you zoom out to the past year or 5 years, we can see how much amazing growth there has been. 1 year ago, the NASDAQ was at about 6,631. So it's over doubled in the last year. Imagine if you had sat on the sidelines this whole time. But yeah, if you look at some of these stocks that had huge price run-ups in the last year, you'll see some drastic falls in price. For example, Tesla, which hit an all-time high of $900.40, but is now trading at just under $600. Or Apple, which hit a high of $145.09 and is now trading at $121.42. A lot of the people that are investing right now are brand new, which, don't get me wrong, I absolutely love, and it's one of the reasons why I started this channel and started talking about investing. However, this does mean that they started investing in the last year, where everything we've seen is growth pretty much. So my point is, many of today's investors have not yet seen a correction, and that's because they started investing right after the pandemic started. Now, nothing really has changed fundamentally about these companies that took massive price dips. Short-term price movement is more based on emotion than actual fundamental changes in companies. So I do think that today's investor, on average, is a bit more susceptible to seeing a big correction, dumping stock from fear of losing money, and then just creating a bigger market crash. Now, I will say that today's possible market crash is not reminiscent of the 2008 crash because defaults on consolidated mortgage-backed securities and subprime housing loans were what caused that one. The lending atmosphere today is way more strict, and as far as I know, there really isn't a way to get a loan that you should not be qualified for. This current correction and possible market crash is more based on consumer perception of stock valuations, fear of inflation, profit taking, and, well, of course, panic selling. Let's take a look at interest rates. So since late 2018, when they hit a high of close to 5%, it has dropped all the way down to as low as 2.65% in January 2021. Since then, it is back up a bit, and people are worried that rates are going to go up. When rates go up, this means that the cost of borrowing money is higher, which could have negative effects on the housing market. And if you didn't know, the housing market right now is really hot. Homes are selling fast, many with multiple offers, and the cost to borrow money, which stimulates the economy, is very low. Hence, there is this whole fear of interest rates returning to a more normal level. Now, going back to the stock market crash. Right now, tech stocks and high growth stocks are seeing a huge correction because they increased so much in the last year. It's only healthy because growth like that just cannot happen forever. Some could even argue that this was a tech and growth stock crash. But even with the most recent drop, if you had bought Tesla in March of last year for $80 split adjusted, you'd still be up 7.5x. And that's the same with a lot of growth stocks. So what I will say is right now, it's not a real crash. It's a much needed correction. But a whole market crash is possible. It's just impossible to predict when it's going to happen because it's likely going to be emotion-based. And that would require a whole lot of bad things and retail trader emotions to set off. So now what should you do? Should you try and time the market? not buy anything, and just wait until you think stocks aren't overvalued. People are always trying to time the market, but you guys, this is literally almost impossible. For example, between January 3rd, 2000 and December 31st, 2019, missing 20 of the best trading days would have reduced your annual average return by 6%. And 7 out of 10 times, the worst trading days were followed by some of the best trading days. So really you can just see how hard it is to predict the market because a lot of the movement comes in these individual days. I know everyone is always trying to predict the next stock market crash, and at some point, it will happen. But using that as an excuse to not put money into the market is a big mistake in my opinion. In May of 2020, everyone thought that there would be a second crash after stocks rebounded. Even I thought so because everything looked pretty bleak. Businesses were shut down, unemployment was high, and it seemed like tenants were just going to have serious problems coming up with rent money. But I still put money into the market and it's made a whole lot of money. The same thing happened near the end of 2020 and the same thing is happening right now. If I had avoided putting money into the market this past year, I would have lost out on hundreds of thousands of gains. And I even have friends who just kept putting it off because everything just seemed way too overvalued. There's no way that things could continue going up and hence they missed out on a lot of gains. Even now the stock market would have to drop like 40-50% to see the gains level out. Now, could it do that? It is possible, but if you want to play it safe after making some good gains, you can always sell some off to take some of the profit. But I don't recommend selling everything unless you think something is fundamentally screwed with that company, especially if you've held for under a year and are in a high income tax bracket, as these gains will be labeled short-term capital gains. I want you guys to accept that there is going to be a crash. Sure, right now I think it's not smart to put all your money into the stock market at once. Rather, you should consider dollar cost averaging like what I've been doing the last year. The way to win at the stock market and build long-term wealth is to invest consistently over a long time period. That's how you let your money grow without losing all your hair. I know it's really boring to hear that, but historically, that's been the surefire 100% guaranteed way of winning in the stock market. Now, I've been picking up more shares these past couple of weeks. For example, I've been buying more Tesla, Apple, Alibaba, Palantir, all of which are on sale right now. If you want to diversify, and I definitely think you should, think about picking up some stocks in the travel or energy sectors. These are less likely to be hit as hard by an upcoming crash, and they have really been sort of immune to the corrections that have been happening recently. For example, you have Disney, you have airline and cruise companies, and even Uber I think is a great pick. Also consider getting some ETFs like VOO or some of the ARK ETFs like ARKK, which were hit pretty hard recently. So after watching this video, what do you guys think? Will this tech and growth stock correction/crash turn into a whole market crash? I think it is inevitable at some point, but how much longer will it go before it does crash? Based on history, it's safe to say that the crash will happen, but we just don't know when. And therefore, I always just say dollar cost average it out. Take out some profits if you want and just remain in the market for as long as you can. There's just no point in staying on the sidelines all the time. If you guys haven't taken advantage of WeBull's promotion, make sure to use my link below and you'll get 2 free stocks when you sign up and deposit $100 or more. Or sign up for Robinhood, deposit anything and you'll get 1 free stock as well. Before you guys invest in anything, I want to make sure you guys do your own due diligence. I'm definitely not a financial advisor. I'm just some guy talking on the internet, so this video should be taken for entertainment purposes only. I've been following the markets pretty closely for the last few years, and these are just my thoughts on what could potentially happen. Anyways, I hope you guys got some value out of this video, and if you did, make sure to hit that like button and also subscribe to my channel to see more content just like this. I make a ton of videos about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.